Good morning, everybody. It's Monday, the 22nd of May, and this morning I'd like to do the Cloud Chart ETF market review. We're going to look at the ETF of the S&P 500 ETFs. There's the usual disclaimer. So today's analysis from an Ichimoku Cloud Chart perspective will be on the S&P 500 SPY ETFs as well as S&P 500 sector ETFs. So we're going to look at sector rotation and the overall big picture market review. Jumping straight into the Pro Real-Time platform, we start with S&P 500 SPY, SPY. We've been sideways moving in a consolidation period with various rebounds from the top end of the cloud here. You can see the first one was here back in March. Second one was within the cloud, within front cloud support at 230, 270. And then another attempt at breaking out past this high. So the market's a little bit struggling to get past these highs. And we've got an interesting double bottom pattern here within a base. But I do think there's still some downside consolidation risk. Looking for support to come back in here at the 236 level. So looking very closely to see this week if the SPY will come in at the 236 level and rebound from that area and then make another attempt at the 240 high. Okay, we are running into sell in May, the normal seasonal weakness, but I do think we could probably see another attempt in June, July of these highs here, and then an overall correction back down to an October low. So at this stage, I would be, swing trade this, similar to what we've been doing here, buy the support, sell the resistance, and that's kind of the current situation with the spider. If we look at the weekly, we can see a little bit extended, double top forming here. Needs to see a significant breakout past that level, but we could see the downside risk back down to the top end of the chart here at 232. So watch out, we've had a MACD sell from a weekly cloud chart perspective. So there is downside risk back down to the 231 level and then significant support here at 219, but it'll be quite some time before we get to that level. But this rally needs to consolidate in and around these cloud levels here from a weekly cloud chart perspective. So looking at 230 as a key support level to come in. If we now look at the individual sectors, materials, XLB, we can see it's still somewhat stuck in a sideways moving consolidation period with various rebounds from the bottom end of the cloud chart support zone here. Dipped below, rebounded from the cloud chart shadow support here, this 51.44 level. It's now testing for support at the top end of the cloud. We could see resistance coming in here at 52.84, so it's a very narrow trading range. But it's a bit of a choppy, very choppy index ETF to trade. And there's still some downside risk. Watching very closely to see if we're going to see the cloud turning down to the front of the cloud. But overall, looking for a rebound to come in here, we need to see a stronger rebound. And if the stronger rebound takes place, we'll be making another attempt at the old highs here. But this is not the best chart to be looking at. We've had a MACD sell signal, so be very careful that we could retest these lows. Real estate, XLRE, also fighting for support at the bottom in the cloud here. Had a nice little rebound, now sitting at the top end of the cloud, watching very closely for 31.57, this area to come in as a support zone. Currently rebounding from there. That could be the swing trade from a rebound 31.56 back up to the first level of resistance, 31.95, and then the old resistance here at 32.56. Watching very closely for a potential MACD buy signal to come in and around these cloud chart support levels. Next, SPY ETF, consumer discretionary, XLY. Found support at the front end, cloud support at 88.20. Rebound slightly from there. We could see another attempt at these old support levels here at the top. It's now significant resistance, front end cloud resistance at 89.46. But we could see weakness coming in after it's hit that target there. It's pretty close to that, the old high there was that 89.46 level. So we are kind of in a rolling over scenario where it's going to retesting. After the breakout, we've got this retest of cloud chart support levels here. And note the MACD sell signal, so there is a little bit of a risk here. But downside risk potential to the 88.20 support zone. Consumer staples, XLP, also in a sideways consolidation base here, rebounding from cloud support to the top end of the cloud. watching to see if the MACD signal is going to come through with a potential rebound from this cloud support zone to the top of the old highs at 55.82. Energy Select, XLE, found support at old lows here, 66 zone, rebounded from there. It's now grinding steadily higher towards the bottom end of the cloud key support, key resistance zone. So watch out for these old highs to come in as a major resistance zone here at 69, 54, and 70. Okay. Financials, XLF, in trouble because we're now trading below the cloud. It's testing the old support lows here, the potential for a swing trade from 22.89 back up to the bottom in the cloud at 23.73 and then $24 there. It's a potential short-term swing trade, but it's counter trend. Remember, we've had a MACD sell here, and we are trading below the cloud, so the overall trend is down from a cloud chart perspective. Healthcare, XLV, rebounding from support of the top end of the cloud, old highs as key resistance area. Front end of the cloud still looking okay, but do note we've had a sell signal from MACD perspective, so it's a consolidation period, and I'm looking for a swing trade when it rebounds from the cloud chart support levels here at 74.44 for a potential upside swing back up to 76.84. So there's the potential short-term swing trade, but we do still see some weakness as it's going to retest these old lows here for support. All right. Next one, industrial, XLI. Similar situation now in a sideways consolidation pattern, rebounded from cloud chart support at the bottom end of the cloud here. Now testing front end cloud support with old highs as the next resistance target here at 67. So watching very closely for that resistance to come in back in there, those levels. Watch out, we've had a MACD sell signal, so there's potential risk for a downside. So snap back to resistance and then another correction back down. So there's a few dollars in that, but it's pretty much a sideways moving chart, not a particularly good one to be trading. Technology, bit of a correction taking place there. Had a nice rally, now it's consolidating that move. It's probably most likely going to come back and retest the $53.80, $54 level. But we can see these front-end cloud chart support levels is coming into play. Note the MACD sell signal, so there's a potential for weakness back down to 53.84, key support zone at the front end of the cloud. Utilities also struggling to get past that resistance at 52.50. Need a significant breakout from there. Watch out, we might have a slow, small MACD buy signal in around here as it rebounded from the front end cloud support, so looking for it to break past that level with significant volume, so to speak. Okay. So just back to the S&P, watching this week very closely to see if we're going to have a follow-through of this rebound here from cloud chart support and then retest to the 240.26 level. But watch out, we do have a MACD sell signal overall in this sideways moving consolidation pattern, and it's consolidating above the cloud. Cloud is significant support with old highs as significant resistance. Okay. Until next time, happy trading.